to our webinar on building a culture of compliance. We're really excited to have you here today and three amazing guests. I'll just start off with a round of introductions for them. So we have Megan, Arias, whose LinkedIn says partnerships, sales, business operations at Increase. I was wondering, what don't you do at Increase? Increase is a partner for MT, build APIs for banking, enabling customers to open bank accounts, issue and manage virtual cards, send money via ACH, wire, check, RTP, and I probably missed some. And you also work in partnership with other banks as well. You're an expert in fintech and have a deep knowledge of compliance. I'm really excited to talk to you about the regulatory landscape for BaaS. You've done some past work in partnerships at Stripe and like strategy and partnerships at Visa as well. So welcome, Megan. We also have Rick Bachman here. Rick is the founder of Scale Group, a consultancy that helps fintechs navigate regulatory compliance. Seems like you've worked with some really amazing companies. We've talked about 6 of Forbes' top 50 fintech firms, which is great. You were previously the head of compliance at Lending Home, which is where we cross paths. And you've been on both sides of the table when it comes to bank diligence with experience in compliance and risk at Wells Fargo and Bank of the West. So welcome, Rick.
Thank you.
And lastly here, we have Zach Figueroa, who's the Chief Compliance Officer at bitFlyer Group USA. bitFlyer is a crypto exchange with $180 billion of transaction volume in 2021, which is really impressive. Crypto is a hot topic when it comes to regulation. So I'm really excited to talk to you about that today. And you have an original background as a lawyer. So welcome, Zach. And then for me, I lead our compliance and fraud product here at Modern Treasury. We want to make it easier for customers to stand up and build compliance and fraud programs with tools for KYC, transaction monitoring, and case management. My background's originally in cybersecurity at Abnormal Security and Titanium. So to kick off the call, I want to set some context by first talking about the nuts and bolts of what we need, what customers need to do to build compliance programs. And I'll start with you, Rick. What would you say are the core components of building a compliance program?
That's a great question. I think the first thing is having the resources, and that's oftentimes put to the end. And well, let's get policies and procedures in place, and let's think about risk assessment if at all. Maybe we need training because our bank tells us to, and then at some point, let's think about staffing it. And in my mind, one of the core pieces is knowing who's going to be doing the work, and do you have somebody either on staff or a consultant that you're using to help you navigate the waters and get the right pieces in place. But from the core, it's all those things. It's board involvement, it's management involvement, it's policies and procedures, testing, training. Complaint management is a huge thing still, not now, still. It's changed a little bit over the last couple of years, but it's those core components that all of the regulators say, here's what you need, but ultimately it's you put the right resources to it.
Great. And from a bank's perspective, Megan, do you want to chime in here?
Yeah, sure. I definitely agree with everything Rick said. I think having the right staffing and the team on board really matters. I think the other thing that it shows a really good foundation is understanding how the different regulations and the different obligations impact your business specifically, and really being able to speak to what is relevant, what is not relevant, and make sure that your compliance program isn't or is tailored to your specific business, the types of customers you serve, the types of transactions you're planning to see. That's really the foundation of building a good compliance program.
Yeah. Mm-hmm. And one thing that came up is the people. Zach, I know you're the head of compliance for part of bitFlyer Group. How did you think about and how should everyone think about when to hire a chief compliance officer, maybe a full-time person?
Just to piggyback off of what Rick and Megan said, it starts at the culture of it. Mentioned the board, and it goes to even the co-founders and the founders of the company. Like, it's building that culture of it. Particularly for us as an exchange working in multiple international regions, it's figuring out what are the local resources that we need, what is the local regulations, who are the regulators we need to work with, and then also honestly, with crypto, it's kind of right at hit the ground running. You can't really get away from it. And we we hired a chief compliance officer before we even launched our services. And that person was actually, in consultation with the business side, actually building up the program, a scalable program, and then building out those resources, right at the forefront of it. And so that's not the model that works for every organization. A lot of times, you see virtual CCOs, just different sort of like consulting, like hand-holding operations that can kind of get you through the first couple steps and sort of the inception and go-to-market strategy. But then I think often, you find that once you're in the weeds of it, once you've been through an examination, once you've met with regulators, you really got to get somebody in the door that's going to be that full-time resource and continue to monitor the program. Because that's what when we think about compliance programs, it's all about sustainability. That's what we're, hoping to achieve at the end of the day.
It sounds like now that the banks are requiring a full-time resource there before launch. So a lot of my clients, they'll have me or someone else in a consulting capacity, getting them through the development of the program, getting them through the due diligence of the bank, helping them vet and structure the organization, but as well as the resources and vendors and all of that. But a lot of the banks will require them to have a full-time resource on staff at launch. And I think that's important. I think it's having something there. And I always think that there's gaps in time often in that development stage where, if you have a full-time chief compliance officer at the very beginning, sometimes like, well, I don't even know what they're going to do all day. We might have questions for them, and here's a resource and you can have those questions answered. But what do you do with the rest of the day? But as you get closer to launch and the development is done, the relationship with the bank is now in a way that you're interacting much more frequently. You're not just talking about, well, here, send us this and that. It's, okay, let's talk about operationally, how are you going to do this stuff? I think that activity gets higher and higher as you get closer to launch. And then, of course, once you turn the keys on, you've got customers now, and you've got complaints, and you've got things that need to be tested and looked at. So I think, that is a very definite line that makes sense for a lot of people.
Yeah, I guess you touched on a really interesting point there, Rick, that we've worked with a lot of our companies on as well, which is ensuring that the compliance people are involved in the product build rather than building in a vacuum and then throwing a product over the wall to your compliance or your legal team and saying, please go make sure this is fine. If you bring those people in early and you really help inform, you'll save yourself a lot of heartache and headache later on. So I think that's really great advice.
Yeah, I agree. Yeah, and that's the worst thing. It's in my opinion, the worst is when you've got developers reading the regulations and saying, "Oh, I know what this says. I can build it. Don't worry." But they don't have any resource to bounce that off. Say, "Am I looking at this right?" Because they might not know that there was a comment on it, or the one of the regulators just provided some guidance about that same topic at Money 2020, for example. And they're reading the regulation, and you take it literally, and it's okay. We know what to do, but it's not quite right. It's not. Oftentimes it will leave a gap there.
Yeah, you need both.
And Zach, I'm curious, like, as your experience working with product teams, like, how's that been? Like, what are some of the like, challenges or things that you run into? Boots on the ground involved.
Yeah, going back to the beginning, it's really hard to build a really mature compliance program. When you think about committees and approval and risk management, that's really hard when you have a small, lean team that's just trying to build products and launch. And so for us, it's we kind of built that out at the beginning, and so we're all in the same room, and product and all the business teams were working together, which has been really great. I mean, it's obviously not perfect, but having those approval processes up and down the line has been really helpful for us in our experience. Again, it's not perfect. Sometimes, product is doing some extra things on the side and things fall through the cracks, but that's sort of what our jobs are, to, be that sort of hall monitor. I don't want to say the police officer, but, hall monitor in a way. And, working together in that collaborative sort of nature has been really great.
And how do you get folks bought into that culture of compliance?
Yeah,
you guys are a good hall monitor. I bet that's hard.
Yeah, I mean, honestly, it really is being in the room. I don't want to be the last resort. I want to be, the first, sort of the first ask. And so, for us, it's been a unique experience because we're also a global organization. So there's a lot of different, priority management that's going on. different regions, different regulatory environments. And so for us, it's a lot of education internally. I'm kind of like, I'm always pushing for trainings. I'm always pushing, just news and Slack channels, regulatory updates, keeping people sort of engaged in the environment, because I think a lot of times, especially when in crypto, you can get the crypto fanboys that are just anti-regulation, the true sort of OGs of the industry. And then you have sort of the next generation of, enthusiasts or, just employees within our exchange. And so, maybe not everybody's super into crypto. Maybe people are they want to do their product build and they really don't want to focus on the industry or the scheme that's going on, out there in crypto. But I think all in all, it really is that education. That's the only way that you're going to build sort of a culture around it, is getting people involved, getting, people's beaks wet with the material that they're working with, because it is a very fast evolving space, which is really I think people actually engaged, is that it's constantly changing, whether it's good or bad, either a hack or just, a regulatory development. It's never a dull moment, I would say.
Yeah, Zach, you make a really good point, and something that's been out there since I started my compliance career. Oh, I hate to say it, in the 90s. It was in the 90s. Sorry if we lost the audience there, Eric. But so back then, it was compliance professionals were considered the police. It was, we would come in, and my role back then in Wells Fargo was walking into a branch dressed in a suit when everyone else was was business casual already, dressed in a suit, carrying a briefcase, coming in saying, I need to see your checks, I need to count your cash, and now I'm going to start looking at all your files and see what you did wrong. And that was the reputation across the industry of what compliance was. And and still, even a hall monitor or somebody, all of those things imply that we're involved later on. And we weren't a part of that build. We weren't a part of the decision making. We weren't a part of the process and the operationalization of these things. We come in at the end to say, did you do it right? And I think that's one of the biggest things I've seen throughout my career as it's changed and into the world that we are now, of we're looked at as a resource. Compliance professionals are resources for the business to know how to do it right at the beginning, before you start building, before you start doing. And instead of being a cop, we're a librarian. And we're the resource that you need to come to make sure that you understand what the requirements are, and we can educate you on those things. To your point, we're still the police, because we're still going to look later on, and we're still the hall monitors, make sure you're doing it right. But it's not just that anymore. And so that people, I think, understand that there's this broad relationship that compliance brings to the operations, and it's not this one little piece at the end to say gotcha and aha and you're fired. It's how do we make this right? How do we make sure our customers are treated the right way? How do we make sure that we're managing the regulatory requirements, and we've got the relationships with the regulators? And I think it's really kind of a glue that goes across the organization, versus this one nasty little bit that everybody hated to see coming in with their suit and eating at Applebee's, which way too many of those on those trips.
A really similar tension, I think, exists between bank partners and their financial technology customers. Historically, there is this kind of adversarial relationship, especially around compliance, and it incentivizes sometimes financial technology companies to only tell their bank partner exactly what the answer to the exact question they asked, or to share as little as possible to avoid scrutiny and just make them go away as quickly as possible. And that misalignment of incentives obviously weakens the entire system, and makes the bank partner's job harder, makes the fintech less secure. And so a big thing that we try and focus on is wanting to we obviously can't ever advise or offer legal advice or anything like that, but really wanting to be a partner with our fintech clients and helping them think through the implications, how they might apply to them, what we expect to see, and really iterating with them, rather than to try and foster a more collaborative relationship, because that really is, and to your point, we still do have to also be the hall monitors at the end of the day. Banks are sort of deputized to and obligated to enforce the rules that exist across the ecosystem. But reducing the tension there with companies and helping to be a partner is really an opportunity, I think, where banks and fintechs can work better together.
Oh, that's so true. And that's something that I'll tell my clients early on when they're starting to vet the bank partnership piece, of looking at it as a partnership. And if you can't talk to them about things, or if you don't like them, if you think that you can't sit in a weekly or bi-weekly call with them in perpetuity, they're probably not going to be a good partner for you. And if you feel like you're lying to them or you're keeping things from them, it's going to be stressful every time you meet. Oh, I hope they didn't find out about this. I hope they didn't see that we set this marketing piece out without their approval. I hope they didn't see that we made this change to how we're doing this or that. It's going to be stressful. But if you can sit down beforehand, say, here's what we're thinking, here's how we want to work on this product, here's some changes we're contemplating, and you have that true partnership, it's a conversation and everybody wins. And if you don't do that, everybody loses, and not just the bank and that one fintech, but all the others who are relying on that bank because you screwed it up for them. Now you're creating ripples in the industry because you did something wrong and you didn't want to tell your bank about it. And I think that relationship is so important, and looking at it as a partnership versus a sponsorship. You're not sponsoring, we're a partner in this. We're doing this part of it, you're doing this other part, and we're bringing this product to market versus, I don't want to tell you about this and it's a secret.
Totally.
You bring up an interesting point I want to expand on, is the partnership between customers and banks. I think banks, and especially bank due diligence, is really a mystery for a lot of the companies that we talk to at Modern Treasury. And I see many companies kind of getting stuck in bank diligence or even frustrated. They don't know what they need to do. It's this long, mysterious process. I want to demystify that a bit for everyone listening here. I guess to start, Zach, can you tell us about your experience working with banking partners, or maybe going through bank diligence and audits?
Yeah, I mean, it's a little bit of an iteration of everything we've been talking about from the very beginning. And one of the points that Rick brought up of, what banks are looking for and what they're looking to see in a compliance program. And I think, sitting on both sides of it, whether it's banking partners of ours and the due diligence that we've gone through as a company, or even our institutional onboarding process for, hedge funds and institutional trading firms. It's a little bit different, but at the same time, it's kind of the same concept of, you're onboarding a customer. What is the company, or what is the firm's risk appetite? Or what is the bank's risk appetite? Obviously for crypto, that was a small group of banks way back when that were willing to take on crypto clients. It is high risk business. It's something, that you want to really drill into. But at the same time, it's, from the very beginning, a lot of it for us was, working with outside counsel, working with various partners, and building those relationships at the forefront when we go to market and look for banking partners. So it's you have multiple sort of stakeholders that are, invested in your concept, that are saying, look, these guys, they have it right. They're documenting everything. They're building up these programs. This is the staffing. This is the growth model. This is the scale that they're looking to implement. These are the partners that they're expecting to work with in the future. This is essentially the business model and how it's expected to grow over the next 1 to 2, maybe even 3 years. And essentially, we're going to vouch for them. And I think having those sort of external partners early on, especially for startups, is really valuable and really important. Whether it's consulting firms or external law firms. But then at the same time, it really comes down to the firm itself. And so you got to be willing to work with the bank, like Rick was saying, as a partnership. This isn't some adversarial role. You're going to them, you're looking for a business relationship. And it's not this okay, we're going to push some stuff under the rug and try to polish our pitch or, our due diligence packet. And it's really, and I think honestly, that sort of transparency actually really goes a long way with banking partners, especially now, several years in and working with multiple banking partners. For us, it is that sort of collaborative workspace, where we can come to each other with things that are not working, things maybe we had a hiccup in, now we've been through an audit. This is what they found. Just want to make sure you guys are aware of it. And this is our remediation plan. This is what we're working through. And so I think, again, it goes both ways. So yeah, I think it's been a great relationship. And I think, certain banks, maybe it's a little bit different, but I think the gist of it is that, it is a very collaborative relationship.
Yeah, and digging deeper into bank diligence, I know it usually starts with some sort of questionnaire from a bank. Rick, can you talk us through what are the kinds of questions on that questionnaire? Once the company fills it out, what's the process after that look like?
Sure. You know, and I would say first that process has changed significantly over the last couple of years. And so, you know, I think all of the banks who are in this space have matured a little bit, partly because they've realized they needed to, partly because their regulators have told them they need to, or partly because others have not done well. And so they're learning from others' mistakes. And so, you know, when you look at what that due diligence checklist looks like today versus 3 years ago, 4 years ago when I started doing this, it's night and day. And it's funny to see now some of the existing programs are getting an audit from their bank who they went through the due diligence with a couple of years ago, and they're getting the audit. They're like, well, they never asked this before. I said, no, they didn't, but this is what they should have from the very beginning. You know, I think of it in kind of three different facets. There's the business piece of it, there's the compliance piece, and then there's the technology piece. Technology and security, maybe putting those as in one bucket. So the first part generally across all of them is, you know, who owns the company? You know, how much money do you have in the bank? Because that's important. Do you have enough to get you through the process of building it? Do you have enough runway to last through that? And is there investor confidence in your business that it seems marketable? What's your product? Is it different than others that we've seen? You know, we see a couple of years ago, everybody was planting trees, and then everybody was interested in doing carbon neutral products, and then everybody moved to crypto when we had the whole huge rush of all the crypto stuff. And now we're seeing more probably in the credit space where people are trying to add a credit product to their existing portfolio or to their existing customers that they have the debit card from a couple of years ago. So the business stuff, product, all of that, the compliance pieces, which we've been talking about. Do you have policies for all of these scenarios? Do you have procedures for what you're going to do? What happens when a complaint comes in? Who handles it? A lot of things around disputes and disputed transactions, a lot around the AML piece, and do you have all of that buttoned up and how you're going to manage those? So this whole list of compliance piece, and then finally the technology side, and that's where I can't speak to it very well other than saying that, you know, do you have a secure platform? Is it tested? Do you have the policies around how you make and manage changes and so on? But is that technology built and is it building? And so those three sections of it, and kind of everybody goes off on their own. Compliance still maintains this broad view of how all of it comes together, and oftentimes serves as kind of a project manager for a lot of it, because we do have our hand in a lot. But yeah, I mean, definitely it's gotten to be much more sophisticated over the last couple of years versus, oh yeah, sure, here, we'll take everybody because we're all interested. Now there's enough appetite out there that the banks have a queue of potential programs that they need to bring on, and they can be very selective. And so they ask more questions, and they ask much better questions now.
So interesting. So it sounds like banks maybe have more customers willing to work with them. They can afford to be more selective. Is that kind of how you see it? Or?
Yeah, they can afford to be more selective, but they can't afford to not be selective. They can't afford to not dig deep and find that there's potentially a problem there, or that, you know, they didn't completely understand how the product was going to work, and they get into it later and realize you can't do it that way. They make sure very clearly on the front end that they know how the product works, they know how it's going to be delivered, how it's going to be marketed, who's going to be doing the different functions across there. And I think we'll talk about that later as far as ownership of the compliance requirements. But yeah, they can't afford to make a mistake, because now, you know, particularly because this industry has gotten so big, you've got much more scrutiny on it. You've got the regulators, you've got Congress looking at it. You know, everybody's very interested in this, and a misstep could be very costly for the industry as a whole.
Yeah, I think that distinction is super useful. I think there are banks that are super selective and they, you know, only work with a handful of customers. But I think one of the things that at least we're really focused on is making sure that we have a high bar, and we want our customers to be able to meet that bar from a compliance perspective, but we don't necessarily want to gatekeep access to banking infrastructure so that people who have great ideas or founders who are really passionate about solving problems can't even get their ideas off the ground because they're in a 9-month queue at a banking partner. And so really expanding access to banking infrastructure while sort of making sure that our customers know where the bar is, and removing that black box, sort of what's happening behind this compliance process, and yet still, exactly like you said, Rick, knowing that we can't afford not to keep the bar where it is. It is not, we're not going to be able to do what we do for very long if we start to sort of turn the other way, or let folks manage programs that aren't set up for success. So I feel like having both of those levers is really important.
Mm-hmm. And one of the reasons I named this webinar like the culture of compliance, I've heard that from some of our banking partners saying, like, I'm really looking for in the due diligence, like, do customers have this culture of compliance? Not only do they have written out their policies and procedures, but it seems like they actually care about what I'm talking about. And Megan, I want to go back to you. Like, what are you looking for, when it comes to like that culture of compliance? Is that like what you mean by the bar? Is that part of it?
Yeah, definitely. It's an interesting saying because it's super subjective. What you're describing is sort of a feeling. Like, do I get a good vibe that these folks are going to be able to meet their obligations? And that can be super useful. And for sure, if you get the impression that someone isn't taking it seriously, that's really strong negative signal. I've definitely had user conversations where people have said, I don't understand why I need to do this, or I don't understand why you need to know that. And it's like, okay, maybe we need to zoom out a little bit and talk about sort of the broader picture here. But I think when we think about having a culture of compliance in the users that we talk to and the users that we ultimately end up working with, it really is just a dedication to building out the systems to support the policies and procedures. I think policies and procedures are great, but what really matters is what happens after the fact. And we're focused on making sure that our oversight and monitoring of those customers is as programmatic as it possibly can be, which helps us operate at larger scale, but really being willing to do the work for the ongoing diligence and the ongoing monitoring is something that we want to make sure our customers understand what they're signing up for up front and are eager to do. They're like, yep, great, we understand you're going to want to see our identity verifications. We understand you're going to poke at our transaction monitoring rules, and they're open to that and excited to work with us and get our input and think through challenges together rather than either sort of so rather than maybe trying to keep us at arm's length, which I also understand based on having managed bank partner relationships on the other side before, and so definitely making sure the partnership side is there is useful. But I do think we try and get as quickly as possible out of that subjective world of, do I get a good feeling from these people, and into really objective, can you meet these requirements? Are we talking about the same things? Are the rules clear to you and the way that they are clear to me, so that anybody who is willing to put in the work can make it, can get their product off the ground.
Yeah, I always love well, what's the least we have to do here to comply with this? Right, well, the least is different than what you should be doing. And the least is going to cause problems for you.
Really
interesting. And I'm curious, when customers like maybe have that mindset, like what's the least, or maybe they don't have that culture of compliance, or they aren't super prepared for bank diligence, like what do you see happen to companies, like, and how does that affect their business usually looking to get off the ground and launch at some point?
When I have chats with users and I can tell they're just sort of like pre-compliance in their journey, they just haven't really thought about it. Maybe oftentimes it's founders who are migrating from another sector. They used to work in hospitality and now they want to offer this type of banking service for hospitality workers, and they don't really understand what banking services require. We always point them to expertise. I think folks like Rick and other experts in the industry who really work with small companies and help them go from 0 to 1 are super useful resources, and big investments for companies. If companies are willing to spend the time and the resources to work with someone like Rick, I think that's a really big testament. Not saying that you have to do that in order to get over the line. There's lots of ways to get there, but I think for companies that are really starting from scratch, pulling in that kind of expertise can be really useful and important. I think we also have customers that once they understand what is really happening here, what offering banking services or card products or money movement really entails, sometimes they rework their funds flow. Sometimes they say, oh, geez, I did not realize I was going to be here. I thought I was going to be in this other universe. This is a different thing. And so they'll sort of change the way they're approaching things or change the parameters of their product. I think we see that less often. Almost always people are willing to put in the work if you help them understand what the work is. I think it's the black box that is really frustrating and hard for users.
Yeah, I agree. And there's nothing wrong with not knowing what you're supposed to do when you move into a different industry. You know, if I were to go into aerospace, I don't know how any of this stuff works, and I'd have to learn it all.
Yeah.
And so it's the same thing when you've got people who are tech savvy and moving into the fintech space. They know how to build things. They know a problem that they want to solve, but they don't know the rules around financial services. And so, you know, that's to Zach's point earlier. That's where we come in as an educator to say, here's what you need to know and how you need to think through these things. And so, you know, that's an opportunity for everyone to learn versus a no. But it's for me, those that say, well, I won't do it that way. That's stupid. That's different. Yeah, then no, we're not gonna do that. That's either too hard. Our customers, we don't want to have them have to click here again. Well, but you have to have them click here again. You have to have them acknowledge something. You have to have them input something. Well, that's too much work. Well, then you're wrong, and it just won't work, and your bank partner won't let you launch. You know, this is a must-have. This is we can try to figure out the right way to do this. You know, the regulation is rarely is it prescriptive on how you do something. It's here's what the end result, what you need to have done. We can present it in all sorts of different ways. So let's talk about how we get there versus, well, I don't want to do that. I don't want to have them answer another question. Well, okay, let's figure it out. But you definitely see both sides. You see the people who are new to it. They don't know it. They don't know the answer. They want to know because they want to offer this product. And so they're a sponge and, okay, what about this? What about this? What about this? Versus no, forget it. We don't want to do that. It's too hard. It's too much work. We don't want to make our developers have to spend that time to put that screen in to ask this question. Like, well, okay. I mean, your bank's not going to like it. You can ask them. They're going to say no.
No,
yeah, it's interesting the personalities.
That's a really interesting point that you made about like they don't want to add the other screen, because I think that on the product side, and obviously as an exchange, as a product that is customer facing, that's the conversation that we're constantly having. And it really goes back to the culture of compliance. Like the fact that we're willing to sit in a room and sort of tease out the idea and go back and forth about it is evidence that there is a little bit of a culture there within our firm. Like the product guys and the marketing guys and the business development guys are willing to sit with us, and we have a voice, we have a seat at the table to say, okay, you need this little button for authorization. You need this, like, this is how it's going to work on the back end. And then reciprocally, that's how we also can talk. That's how we talk to regulators. Like we're in an educator capacity working with regulators constantly, because I think one of the unique things about working with US regulators versus like international regulators is international regulators typically will tell you whether or not they will allow something. US regulators are like, go out, build it, and then we'll slap you on the wrist later for it because you did it wrong. And so it's a very different culture, even just within the United States. But I think, again, it's, you know, teasing out the ideas and willing to go back and forth, whether it's internally or externally, again, with banking partners or regulators or auditors, and sort of, you know, work collaboratively on a lot of these issues. Because I mean, if we're really in the business of solving a problem for end users, then we should be willing to work with each other and solve a problem internally so that we can actually offer that product at the end of the road.
Right. Yeah. And challenges are fun sometimes, right? It's well, now, why do we need to do this? I was like, well, okay, here, let's try to work through it and understand it. And sometimes the answer is it's a horribly written regulation, and the requirements are really unclear and they don't make any sense to us either. But here's what we have to do. And sometimes that is the answer. To others, it's like, okay, it doesn't tell you what we need to do. Let's figure it out. And can we find a way, to your point, to tease this out in a way that isn't overwhelming for the customer, isn't overwhelming for the developers, that they can just kind of fit in. We can make sure we're complying, we're getting this stuff right. But yeah, sometimes the answer is it's a bad law. You know, and it doesn't make sense for anybody in the compliance community. It contradicts some other law, but you still have to figure out a way to manage it. And so sometimes we are confused by those as well, but we do our best to help the business understand how to implement it.
Yeah, give us an example of one of those badly written laws. What are you thinking about?
Well, so here's an example of a contradiction. Reg B, for example, on the credit side, so ECOA, you can't discriminate in making credit decisions. Okay, so one of the things that typically you won't do is, well, I don't even want to see your driver's license, because if I allow my underwriters to see a driver's license, they might have some internal bias based on the picture, or based on the information, the demographic information that's on the driver's license, that we don't want them to ever consider as part of their underwriting. On the other side, you've got BSA, that requires you to identify your customer. And one of the ways you do that is to get a driver's license. So you've got two that directly conflict with each other. And so it's how do you resolve that to make sure that you're meeting the requirements of VSA and you're properly identifying the customer, but at the same time, you're not allowing somebody in the underwriting side to have any sight into it and can't make a decision based on a personal bias. So I think that's my favorite example, but there's others out there that pop up all the time.
I think I cut you off, Zach. What were you trying to say? I want to let you chime in.
No. I think that was a great example. Actually, I might steal that one day. But I think based on the previous conversation, and all the talking points that we've been having, I think the last sort of piece of all of this is the consistency. And I think, a lot of times, and it's hard, in the beginning when you're propping programs up and you're trying to, build culture and all that stuff. But I think one of the sort of the final piece of the puzzle is the consistency. Like once you see a program mature over time and you actually, whether it's a compliance program or just the product in general, I think that's how you can, another, way to evidence sort of how you've really built culture around compliance, because the product wasn't just deployed 3 years ago and it hasn't changed. Like it's really grown over time. We found bugs, we've found problems, we've worked at the kinks and we've streamlined it. We've gotten better. And then that's also the same thing with the compliance program. Like it's gotten better over time. We found some of the loopholes, we found some of the little, the kinks in the chain, and we've fixed them. We've shored them up. And so I think that was just sort of the final piece of the previous conversation we were having. But again, Rick, your example was great.
Thank you.
Megan, I want to go back to something you said earlier. You mentioned like customers, different, maybe it's like account structures and being in the flow of funds or not. One thing that comes up for us at Modern Treasury is customers thinking about like FBO accounts versus regular DDAs. How do you think about like what makes sense for your customers, and also how do those account structures affect compliance requirements or how you think about things?
Yeah, 100%. I think sort of the high level disclaimer here is you should always talk to your own lawyer to understand how where you sit in the funds flow impacts your regulatory obligations. But the big bucket of regulation that surrounds this question is something called money transmission. And money transmission is governed at the state level. Licenses are awarded at the state level. And so getting 50 state money transmission licenses is often really cumbersome for small sort of startups or small technology companies. Larger companies eventually go down this path. But if you want to move money from one person to another, the odds are you're in this money transmission land, and you should understand how that applies to you. Using an FBO account, as it's colloquially referred to, is really having what's called a bank titled account for the benefit of your customers. And so if I'm starting a company called Megan Inc., I open an FBO account. It is bank partner for the benefit of Megan Inc.'s customers. And then I can hold the money in that account, and it's really being custodied for me by my banking partner. So I'm never taking possession of the funds. They're holding it for my clients, and I'm acting on my clients' instructions to move money in and out of that account. And that is sort of a type of account structure that allows smaller companies or startups to get off the ground without needing to go acquire 50 state money transmission licenses. Again, definitely you should talk to your own counsel. Some states like Texas and others are starting to ask a lot of questions about this model. So, but it's something that has been around the industry for a while. If you are in a category of folks where either you're not moving customer money, or you have you do have your money transmission licenses, or you have another regulatory body that has given you permission to take customer funds, the biggest example of that is the Security Exchange Commission. If you're a registered investment advisor or a custodial broker dealer, you can usually take possession of your customers' funds to move them for the purposes of your core business. In those structures, there are different types of accounts that we use. They're not custodial FBO accounts, but basically that's the main distinction. And so one of the first things we always ask is, what is your funds flow? How are you thinking about money transmission? Because while it's never the bank's obligation to be your lawyer or to offer you legal advice, it is our obligation to make sure we're not facilitating unlicensed money transmission. So we need to ensure that we have a plan in place to to mitigate any risk of that. It's really a question of the facts and circumstances. It's not like it's not subjective at all. You either need to worry about this or you don't, based on your business model. Is that helpful?
Yeah, appreciate the deep dive. And the way I think about compliance is often like people, processes, and tools. I know tools is important, I think, for customers as well. Usually customers aren't building everything in-house and using some vendors. Zach, I'm curious, like, how do you think about your partnerships with vendors as you build out kind of compliance tooling and processes?
Yeah, I mean, we rely on vendors every day. It's, again, I like to think of us as like a smaller, sort of still startup environment in the US with the sort of support of a large financial institution. It's our Japanese parent company. We're a Japanese crypto exchange. So originally headquartered in Tokyo, very large exchange, very mature, been around since 2014. And then we launched in the US in 2017. And so I think coming into the US, one, it was to Megan's point, the question of what are we going to do? Are we going to leverage a lot of partners and all of their licenses and do a lot of FBO stuff? Or are we going to, like, what is the path? Or are we going to build out, get all of our money transmitter licenses, build a lot of things in-house and go to market that way? And so we actually opted for that model. We went out and got all of our money transmitter licenses. We were one of the first recipients of the New York Bit license, which was sort of like cutting edge virtual currency license way back when. And then we, went to market. So we did a lot of stuff in-house, built a lot of core product. And then as the program scales, that your product has to scale. And then it's, okay, do we continue investing in a lot of core internal infrastructure, engineering resources, code writing, things of that nature? Or do we start to leverage a little bit more scalable, quickly onboarded API integration business, vendor partners within the US? Because the US is a unique sort of financial ecosystem comparatively to, our other regions. And so that's where we found, okay, let's pivot a little bit. And again, the consistency and the growth and the maturing of a program is, then finding strategic partners in this space, vendors that our banking partners vendors that our banking partners already work with, is often really helpful when you're building out API integrations. And so I think, it's having sort of like trusted advisors, in the space, sifting through the slew of vendors that are out there, but then also having a lot of key stakeholders within the company, compliance folks, with the business, with the marketing, with the product, actually, the builders within the company, to say, okay, this is where we actually think, strategically we should partner with this one over another one. And I think, there's so many different ways to do it. It's, bespoke, there's out of the box, there's, all the different sort of configurations internally. And again, to Megan's point, facts and circumstances, you really have to figure out what that flow of funds is, what you're trying to achieve, and then drill into which vendor is the right choice. And it's then, do your onboarding and all of the due diligence and all of that stuff. But that sort of that RFP process is really interesting. And I think it's a really core part of figuring out exactly who your key vendors or partners should be.
Interesting. It sounds like you oh, go ahead, Megan.
No, I was just going to say you touched on something really interesting, which is if you do go the for benefit of account route versus your own licensing route, you are relying on the bank's charter. So if you're a licensed money transmitter or if you're regulated by the Security and Exchange Commission, you have your own regulatory relationship. That's the primary person you worry about. When the bank is holding the funds in this for benefit of account structure, all of a sudden they're lending their license to you. And that is really where banks start to have heavy compliance and oversight requirements, because you're offering a service on behalf of the bank. You're essentially selling a service of accounts or money movement for the bank. And that is where a lot of these heavy compliance requirements come from, which I think sometimes doesn't necessarily register for users until we talk about it in a lot of detail. So thanks for saying that, Zach. Sorry, Eric, I cut you off.
No, this is great. Maybe for our last kind of topic of conversation, I want to shift gears a little bit to current events. And I think we've touched on crypto a little bit. I want to talk about that and like the regulatory environment and how that's changing. And then I also want to touch on banking as a service providers, another topic that's come up very recently. Maybe starting with kind of crypto in the industry. Rick, like, how do you see like banks, like how do you view like customers working in different industries like crypto versus maybe more traditional industries?
There's definitely been a shift to have a broader product set, and so you're seeing more coming in that are specific to crypto, or they've got other products that they're wanting to add a crypto element to it. From a regulatory perspective, it's somewhat challenging because it's such a moving target. We know that there's interest in it. We know that there's applicability, particularly on the anti-money laundering side, and making sure we're putting those controls in place. But the question is, what's next? And so, how do you build certain amount of flexibility into your product, into your compliance program, to be able to allow for that if it happens quickly? And so, part of it is where which administration is in charge and how that looks. We saw over the last several years, the CFPB was much lower priority because it wasn't getting the funding that it had in the Obama administration. Trump came in, CFPB was literally the Milton of office space down in the basement of the building. But we're seeing more CFPB actions now. We're seeing the prudential regulators with some recent activity in some of the sponsor banks. And so from a crypto perspective, we're all kind of just hanging on, waiting to see what the next piece is and how it might follow what's happened in Canada and some other areas that they are spending a little bit more time on the crypto regulation. So right now, the key word for me is just flexibility and making sure that we're keeping up to date on what's happening.
Exactly. I think you touched on like U.S. regulations versus Japan. Yeah, I want to hear your thoughts.
Yeah, no, I mean, this could be a whole other webinar. I could talk about this. No, I mean, but to Rick's point, I think it is, it's cyclical, depending on who's kind of in charge right now. I think particularly this sort of last bull run, you saw a lot of talk about it, a lot of bills introduced, a lot of trying to move the needle a little bit further on regulation. I think from the money transmitter perspective, the states are relatively maxed out in terms of where they're going to go with it for the time being. It's pretty clear, virtual currency, if you do it, you got to get a money transmitter license or work with a partner that has one if you're going to facilitate that transfer or that flow of funds. But then at the same time, I think right now we're kind of in a bear market. And this is actually where it gets really interesting, I think, in the crypto space. I've been doing this long enough. I went through the previous few bear markets. And this is when the really cool stuff gets built. And then I think that's also when a lot of regulation doesn't really happen. I think, and particularly in the US, I think regulation is very reactive rather than proactive. Versus other countries, which are much more proactive in terms of telling you exactly what they want and how they want it to be done. And so I think that's uniquely American, not saying whether that's good or bad, but I think it is a really interesting space, that's continuing to evolve. And obviously, again, to Rick's point, being flexible, agile, and honestly working internally to build up, and I guess working internally to know exactly what your product is. So that you can educate regulators when they come knocking on the door to say, this is exactly what our flow of funds are. This is what we've been doing. This is how we're combating money laundering. This is how we're keeping bad actors off the platform. And this is our core product. This is our value add to the ecosystem. And then again, these are all the people that we work with that have been vetting us as well, that we have really good relationships with. And so I think, it'll be interesting. We saw in the last sort of market, a lot of lending, a lot of staking, yield products come out, which are very unique, very interesting products, and very sort of vague in terms of regulation, as we've seen. And then we also saw a few bad actors not really handling money well. So that begs the question, maybe there needs to be a little bit more clear regulation on the credit, the lending side for crypto companies. There's also a lot of sort of movement on cybersecurity and sort of the technology piece of how you're custodying assets, how you're auditing assets, virtual currencies. It's difficult to manage. It's difficult for auditors, even for financial auditors, to come in and verify assets, that are digital, versus they can go to our bank account, pull all of our statements, contact Silvergate or Bank of America or whoever it is, and say, do these people have this much money in the account, and can we say that this is the amount that was there on December 31st? Virtual currency, it's a little bit harder to do, and so it is a commitment on the firm's part, whether or not they're going to act in a compliant way, work with various stakeholders, external and internal, to make sure that, you know, we're continuing to be flexible and agile in this highly evolving ecosystem.
Awesome. Kind of last topic here on banking as a service providers. You know, I'm sure some of you have seen the news about Blue Ridge Bank agreeing with the OCC to shore up its compliance program. I'm curious, Megan, like, what do you think of that news and kind of banking as a service broadly, and you know, obligations for compliance?
Yeah, absolutely. I think banking as a service is a really interesting space. I think that there are advantages to offering sort of easier access to technology. I think that there are maybe two main pitfalls that have, in my experience, been challenges for banking as a service platforms. And I think this is changing. I think, you know, to the point Rick made earlier, everyone is watching what's happening right now in the regulatory environment and learning and adjusting accordingly. But I would say the one big thing that I would always caution users to watch out for are one size fits all compliance approaches. Anybody who tells you, oh, we can support any type of platform and you don't have to worry about your compliance at all, like buyer beware. If you are doing something interesting, or the way you are moving money is exactly the same as every single other customer that this banking as a service platform has, there are compliance obligations or requirements that you should be thinking of and aware of. And I think making sure that you know what those are, you know how your banking as a service provider is taking some of those things on, and what's sort of left and what the plan is or the approach is there, is super useful. I think the big things like identity verification and transaction monitoring are maybe more easy to programmatically implement. Other things like complaints management, marketing reviews, credit exposure management, it's really important for a bank to understand how those things are working for their end customers, and with the banking as a service layer in the middle, sometimes that can get abstracted. So I think that's an area where folks have maybe needed to spend a little bit more time focused on, and I think that's changing. And the other thing that I've been sort of thinking a lot about and hearing about from the folks we talk to in the regulatory space is wind down plans. Sort of what happens if your platform goes away, right? Your customer in this FBO structure, your customers are customers of the bank. And believe me, no one wants you to succeed, or maybe second to you and your team, no one wants you to succeed more than your banking partner. But in the event that something goes wrong and the money needs to be redistributed, or we need to figure out who is owed what in the accounts, having a banking as a service layer that sits in between the bank and those accounts can sometimes obstruct the ability for the bank to do that. Definitely not always. And I think this is an area where folks are also getting a lot more crisp, but that's a big focus in terms of banking as a service and making sure there's a plan for all these consumers who technically have, or especially on the consumer side, I guess. On the commercial side, maybe things are a little bit less under a microscope right now, but making sure there's a plan for what happens when, and I guess that would be my advice also to anyone who's operating a banking as a service platform. Like we should all have plans for what we're going to do if we have to redistribute funds to customers or make good on our obligations to end users. I think those are the two big areas. I'm curious, I guess, Rick, I know you work a lot with folks who I'm sure are being enabled through banking as a service providers. I'm curious if you have thoughts here or what you think.
Oh yeah, I have lots of thoughts on this topic. Yeah, and I think the two that you mentioned, and you even say it the same way, even with the same hand gestures of like, be careful when you hear, "Don't worry about it, we handle it all." That is probably the most worrisome thing that I hear from the banking as a service providers is, "Oh, don't worry, we handle it all." Well, what exactly do you mean by that? And have we gone through the exercise to say, what exactly are you handling? What are the requirements of each of the regulations that you will be handling? Do you do this? Well, we don't do that. What about this? No, we don't do that. That's on you. And so you hear this blanket statement, but it's not quite right oftentimes. And there are pieces that you still need to, you're the one sending certain notifications as the fintech program. You're the one doing certain activities on here, and then the other question of indemnification. And so if the banking as a service provider is saying, oh, we do all of this stuff, And is there indemnification if we're relying on them, if we're the fintech and we're relying on the BaaS partners to do that, and they do it wrong, are we indemnified? And typically what I've seen is the answer is no, because they're operating on as at your direction, even though you don't really even know what they're supposed to be doing because they told you to handle it, so you don't have a whole complete robust compliance program. And so a lot of, in my mind, is making it very clear. And even if you do have you're using a BaaS provider, having your own compliance program, you and the bank are on the hook for this. The BaaS provider, in my mind, is another vendor, and they just happen to have an aggregate of a bunch of different services that they're able to plug you into, including to the bank. But typically speaking and contractually speaking, generally they're just another service provider. So that worries me. A couple other things about servicing. So when people are using a BaaS provider and the BaaS is doing all of the customer service stuff, well, your customer is being treated the same way as every other customer on every other program that's using them for servicing. And so you can't really differentiate yourself and your product by how you're servicing your customers because you're not the one doing it. So those couple of things, and to your point on kind of a wind down plan, sometimes you want to leave your BaaS provider and you have decided, maybe you've got a proof of concept and it's worked well. Now we want to go off and create this relationship directly with our bank. I think that sometimes provides another layer of problem. Again, with the FBO structure, those customers aren't really your customers. And so you can't just take them with you to another program. You've got to manage it in a way, you're basically inviting them to come with you if you leave. And so I think, again, and we're focusing on the negative stuff, there's tons of really good things about a BaaS provider as well. It's speed to market is significantly better. You can get things up and going. You're not going through all of the bank due diligence the same way at the same level. You can get the product up and going. The sponsorship is there. You can automatically plug in with the networks. But there are definitely things. I mean, it's a pro and con type of evaluation you need to do versus just saying, oh, this is fast and easy. And the revenue sharing as well. Making sure that you're familiar with how your program will make money and how much you'll make versus how much other providers will be taking from it. So a lot of factors to consider. It is right for a lot of programs. It's wrong for a lot of programs. I think the last point of that is just the ownership. I see people coming in and they have a really, really great idea on how they want to manage their product. They've thought through this. Maybe they've thought through it for years. And can we do it this way? And because it's a little bit faster, it's a little bit cheaper to go through a BaaS provider, you're really giving up a lot of ownership, I think, in how that's being delivered, how certain aspects are being managed. And so it's, to your point, buyer beware. It's good. Don't get me wrong. and I work with a lot of the BaaS providers, and I think a lot of them do really great work. But it's definitely something to put the right amount of time in considering.
Yeah, that's a good point. I also sometimes point users to BaaS providers when I feel like maybe they're not quite ready or they don't need to at this moment in time invest all the time and all the resources in standing up a really robust compliance program. There is a time and a place where that's the right solution for folks. I think that's a really good point.
Yeah.
And I'm curious on the topic of control. It seems like in some ways some companies are giving up control over their compliance programs. Like kind of how do you view this topic of like visibility and control, Rick?
Well, I think that's the whole point, the ownership piece. And again, if what you're being told is hey, we handle all of this, we do it all, but I don't have my own compliance program. So I don't know what I'm even supposed to be doing. I'm relying on my BaaS provider to say, we do it all. And don't even worry about knowing what you have to do because we do it all. But there's automatically a disconnect there. And so you're giving up, not just, you're giving up what we talked about from the very beginning, this culture of compliance, which is education and working with your business to make sure you know how to build things the right way, how to provide your product to the customer the right way. A lot of that is moved. You're outsourcing that to a partner, but you don't really know what the requirements are that you're asking them to do because they tell you what they do, and you say, okay, that seems like it makes sense. But it's all parts of it. It's the ownership, it's the control of how you manage the customer, it's decisions that you make about what you do with a specific customer's account or a complaint or anything that comes up, a lot of times you're just removed from that decision. And so you don't really even know how sometimes your customers are being treated.
Mm-hmm. Yeah, it seems like there's also maybe some like risk, like tail risk here of like regulations, and if everyone's kind of under this one big FBO umbrella, and BaaS providers get into some hot water, where does that leave the companies who are working with them, even if they are taking some ownership of their own programs?
Right. Yeah. I think that's definitely a question out there. If a BaaS provider is doing something wrong, and they're doing something wrong, maybe on your program, can you assume that they're also doing it wrong for all of the other programs that they're supporting? And now what position does that leave the bank in? Because the bank is holding these accounts, and there's a certain activity that is categorically wrong. Yeah, I think that creates a huge amount of risk for the fintech program, for the bank, and then ultimately, survival of that BaaS provider. So we're getting to the scary part of the conversation. I think that, it's I don't think it's meant to be this warning flag, but it is, I think helpful to understand the risk that's involved in going each of the routes. And I think there are quite a bit of risks that pose themselves when you're using a bank, BaaS provider.
I can add one little endpoint to that, because I've been on both sides of that. So I think, particularly how, the partners that we've had in the past, I think relying on one, without having redundancy and other sort of, fail safes, because, they can turn it off. Your partner can turn everything off, and then your product you're in the water. And so, and your customers are not gonna be happy, and, all that stuff. So I think it's, building the redundancies, and that's really hard sell internally to build redundancy. Having multiple products, working in tandem that can essentially do the same function when everything wants to be streamlined. But then at the same time, I think if your BaaS provider is also not educating you on the requirements, I'd be curious about that provider as well. And I think that's where we go back to the whole sort of collaborative relationship between partners. And so it was interesting comments from Rick, because I feel like I'm like bringing back memories. Good and bad.
Yeah. And I think that is a hard conversation to have sometimes too, that and that's not to say that a direct relationship with a bank is always perfect. When you're bringing your own, and you're saying, I'm going to bring my own processor in, and maybe my processor is managing the program, there's a lot of things that you're still kind of not in the dark about, but hopefully you get more time going through and understanding who's doing what, who's responsible for what activity. And I think that happens a little bit more often because you've got more time to do it. If I'm working with my bank and I'm going that route, and I'm bringing up the processor, I'm bringing in my own vendors to do KYC, to do transaction monitoring, fraud monitoring, and so on. I'm working with each of those to really talk through what it is that everybody's going to be doing. And that's partly why it takes 6 months, because you do get to that level of understanding. The bank wants to know what you're going to be doing. You want to know what everybody's doing. But part of that sale of the BaaS is, don't worry about it, and we can launch in 5 weeks. Well, in 5 weeks, you don't have enough time to even go through all of those things and say, okay, line by line, reg by reg. Okay, if we have a dispute on a debit product, who's handling the provisional credit? Who's sending the notification to the customer? Who's doing the investigation? Who's providing the final credit? And who's providing the final outcome to the customer? They've got 5 or 6 different steps that go in there, versus, hey, we handle the Reg E stuff. Okay, you handle the Reg E stuff, great. And I think that's kind of the difference, that level of detail we talked about at the very beginning of this. So the due diligence process that happens with the bank now is much more sophisticated and detailed than it used to be. It all used to look similar. Going through a bank, BaaS provider, or through directly with the bank, there was a difference, but it wasn't that much difference, because it's like, okay, who's doing Reg E? Oh, we're doing Reg E. Okay, who's going to handle card issuing? Oh, we're going to do that. And so you kind of check it off, and it was relatively quick. But now I think that is the distinction. The bank needs to know exactly how all of these pieces are going to be handled, and they ask the questions about it, and you dig into it, versus, okay, you got Reg E, check.
Amazing. Well, this has been a fantastic conversation. I think it's been really illuminating for folks to learn about compliance and banks and BaaS and crypto. thank you all for your time, Megan, Rick, Zach. This is great. Thank you.
Yeah. Thanks, everybody.
Thank you, Eric. Yeah.